Hi everyone. It was kind of a do nothing session on Friday, which is actually probably good to see if you were worried, if you were really long going into yesterday, had yesterday's sell off happen, and then were worried about today's price action. Overall, it wasn't that bad, but still, it's not good. The Russell 2000 was down 0.32% today, and the NASDAQ, focusing on these two, were down 0.09% today. Volume was lower on the NASDAQ. However, if we go over to the New York Stock Exchange, we can see volume was above average. But still, we're holding above the 50-day moving average over there, and on the S&P 500, we're right now right on the line, a little bit below it. But our weakest market, the Dow Jones Industrial Average, that's basically the worst looking index. But I got to be honest with you, if any of the indexes have to look bad, that's the one you want. So right now, obviously, after yesterday's sell-off, since it was such a harsh break and volume was confirmed in all the ETFs, we did switch to a neutral signal. And even though some are pretty sure that this should be a sell off coming, I got to remind everyone, we still have a lot of charts out there, or stocks, excuse me, that are consolidating very nicely. They appear that they want to move higher, and it is a mixed boat, but as we get through with earnings season, we'll see how we resolve. If we do resolve to the downside during the next week, I will, of course, increase my hedges in the inverse 3x ETF positions, and I will also pare back longs, take gains with stocks that close below the 20-day moving average or a low a day if it's a lower volume breach the next session, and just keep selling what doesn't work. And for instance, today, what didn't work? DGI didn't work. The reason why I didn't fully sell it yesterday is because volume was below average, and the 3078 close, how I saw it basically was that 3078 is above the 3034 level of the signal date, so I wanted to go ahead and use the low a day of 3059 today, that day on the 15th, yesterday, as the final cut loss. DGI did that, so today it's a final cut loss. So DGI, hard rules on the book. Q-Core. Now, if this sell-off looked a little bit worse, and let's say that Q-Core is pulling back on this heavy volume, remember the ultimate final cut loss for me is the 64.56 level. With it closing above it, that means it's a 75% sell or a 50% sell. I have chosen 50% because the pullback each 3 days has been on lower and lower volume. Pretty tight overall training. Relative strength line is holding up relatively well, and the BOP is growing. So if Q-Core can actually base out here, I would actually prefer it, because if it bases out and breaks out, that signal will be much better than this signal and will allow me another chance to add to my position in Q-Core if the market wants to trend higher. If it does not, no big deal, and that's why we got to take preventative measures, and that's why Q-Core closing below the 66.25 level is going to be a 50% sell for me. Could be 75% for you, could be all for you. It's up to your risk level. And that's then whenever this comes in, VVTV. Disappointing but not shocking. VVTV is closing at 547, and the 547 close is below that 553 level, which was a level that I was using as a confirmation sell signal. So because it's closing below that level and the 50-day moving average, this isn't just a 25% sell, this will be a 33% sell. However, from the point where we added the most, we now have a negative 2% return. So if you want to go ahead and cut 50 to 75%, you're more than welcome. It's up to you. But since our very first signal, we still have a 7% gain, and I want to use that level if we can bounce here. If we don't bounce here, and if we close below the 530 level on heavier volume, bye-bye VVT. Then VVT will become a full sell signal. But those are the only 3 sells today. The 2 purchases made today, one kind of was a little bit ENV broke out above my buy stops, and they were pretty hard on the book. The buy stops were right around the 2730 level. Actually, they were at 2730. They triggered, and the stock closed at 2686, so all is well. However, if the stock closes below 25.95, I will be selling off my ENV. As it is, though, the stops did trigger, so I'm long ENV. If I'm wrong, I won't be risking too much. But once again, this is another stock that I was referring to stocks that are holding up well despite the market pullback the past 2 days. Then on top of that, some oil stocks are starting to shine. I saw Halliburton give a pocket pivot point buy signal today, and APC also gave a pocket pivot point buy signal, and that's in my William J. O'Neill AAII scan. Yeah, that's what it is. And so I'm going to go ahead and take a 2% long position in the risk account, 1% long position in the non-risk account. If it works, great. If it doesn't work, I'm only going to be risking right around 3%, and I can handle that with a 2 and 1% position. Once again, this goes back to the recently with all the long signals. How come I didn't go 5%, 10%, 20% in any one position? Because things still don't look how they used to look. The buy stops and focusing on leading stocks continues to be the best methodology to use in this market. But right now, I think we all need to go ahead and take it easy. It's the last 2 weeks of August, the last 2 weeks of summer. I'm hoping we do consolidate more because while everybody's trying to top call here, I'm actually quite happy with the pullback. But I'll join the top callers camp once we get some confirmation. If we can get some sell-off confirmation, I'll join everyone in trying to top call this market. But for right now, we just have a pullback. We're only below the 50-day moving average on one index, so I don't see a whole lot to be freaking out about here. However, am I ready for a black swan? You better believe it. You better believe it. I'm always ready for a black swan. Have a great weekend, everyone. Aloha.